Good morning. Welcome to Forex In Four. Today is Friday, August 26, 2011. Waiting on Bernanke. That's the mood of the market today, and it's going to be interesting to see what happens here at 10 a.m. But first, we have a little bit of housekeeping to do just ahead of time. I just want to tell you about some of the other things that came out. There's not a ton of news today, but there was some significant news in the UK. We're looking here at the pound. We can see the pound sold off a little bit, and we're just sitting up above this 62.50 area, which it looks like a little bit of a double bottom here. Okay, you can see that we had reached that previously on the 15-minute chart. I'm just going to back it out for you. But basically what's happened in the UK is that they came out with their GDP figures, and it came in as expected. All right, 0.2% for the quarter, pushing the year-over-year number to 0.7. Okay, but you had lower manufacturing there, which means the economy's slowing in the UK, and I don't think anybody's surprised that that's the case, especially when you consider, the government austerity that's been taking place, and how they're really trying to get their fiscal house in order. And I'm so torn on these matters because it's the kind of thing where people just say you have to grow, you just can't stop growing the economy, and maybe sometimes you need to contract the economy a little bit to weed out the fat, so to speak, and to make it stronger. So it's the kind of thing where I don't necessarily know that they're doing the wrong thing in the UK, but you can see what's happened with the pound here, and the pound sold off a little bit on it, and that makes sense. I mean, if you think about what the Bank of England's been doing, they've left rates at an extraordinarily low level for them for an extended period of time, and they're probably going to continue to do that. Okay, although now there's further talk of quantitative easing on the table, and that perhaps they may expand their bond buying. So we'll see what happens with the UK and if the numbers get worse, but the market's pretty much set up for the expectation here, and the numbers didn't come in way worse or anything like that, so it wasn't that big of a deal. So we're going to keep an eye on this, but later this morning we have US GDP figures coming out. And like I said, it's going to be interesting to see what that does. That's going to be in about 20 minutes or so. And I wonder if, that's going to actually affect what Bernanke has to say today. All right? No one's really certain what's going to come out. And I'll get to this Jackson Hole deal in a second. But U.S. GDP figures expected to come out. All right, we're expected to see what's it, 2.3% for the quarter, pushing the annualized to 1.1. We'll see what happens with that. We're also expecting personal consumption numbers, all right, and they're expecting a gain of 0.2%, which personal consumption is a component of consumer spending, which means that's a component of GDP. So we'll have to see what happens there. All right, and then we have University of Michigan consumer confidence figures, which are expected to be higher than last month, just by a little. But the level of 56, it's still pretty low based on historical measures. So that's really what's been happening. Overnight in Japan, the Prime Minister Noda, he resigned. He said, it's time for me to bow out. I've done everything I think I can do, and he was receiving a lot of criticism over the response to the earthquake and the tsunami and the nuclear disaster over there. And listen, it's sometimes being a politician isn't all it's cracked up to be. Now, I think you kind of have to respect somebody who can put their own personal gain aside for perhaps the betterment of the country. And it's a shame you don't ever see that happen here in the U.S. unless somebody gets caught with their hand in the cookie jar, or with the secretary or whomever else doing something untoward. All right. Other than that, man, these guys here in the U.S. they wouldn't never step aside for the betterment of the country, and that's an unfortunate quality that we have here in the U.S. But regardless, they're going to be doing a new government over in Japan, so we'll see what happens there. I just want to take a look here. We can look at dollar yen. It didn't really affect it too much. And you can see here we had dollar strengthening a little bit, and now we're starting to see a little bit of dollar weakness happening. And it's going to be interesting now. We have Bernanke speaking, 10 o'clock Eastern time. He's going to come out, and people are wondering what he's going to do. What's he going to say? Well, there's so many different sides to the coin that it's hard to sort of telegraph what's going to be happening. But I think that at this point, it's going to be difficult for him to come in and start talking about QE3. All right, the inflation expectations are already higher. When he did QE2, all right, inflation was at such a level that it was what happened is what happened. Okay, prices have gone up since then, so you can call that stability. Okay, rising prices mean price stability. All right, personally, I'd prefer to see price stability at lower prices. You know, oil at $50, not $85, but that's just me. You know, there's a lot of people, I guess, that depend on having high prices, including banks, which is a big problem for him, and the housing market. And you know, we're not getting any solutions here. So he's just tinkering around with monetary policy, and it's you know, got the potential to create inflation abroad. So, you know, at this point, I don't know that there's the political will for him to come out and say, yeah, it's time for QE3. So he may disappoint today. He may just reiterate what he's already said. All right, he may say very little in the way of something new. All right, he may outline what the potential policy responses could be. All right, he might say, listen, these are the tools we have left in the toolkit, and this is what we could potentially do if X, Y, and Z happens. Okay, but you know, part of that is that he's going to be discounting. That's, you know, going to be used as a discounting mechanism. All right, because once you know what he can potentially do, you take that into consideration now, and now all of a sudden the market dynamics have changed. So I think there's going to be some disappointment today, and I think we could see some dollar strength out of it. Okay, we actually see dollar falling here versus yen. All right, but we could have the potential for reversal. So let's just take a quick peek at Euro USD, and you can see here we've just been trading in this extraordinarily tight range here for the past week or so, and it's kind of been you know, waiting to see what's going to happen. All right, right now we have gold higher. Show you that one yesterday. Continued sell-off in gold. Part of that was the increase in the margin requirements at CME on top of the major selling that's already happened. But you can see here we're just under 1800. All right, that's just under the R1 pivot resistance on the daily chart. But we're looking at here on the 2 hour. All right, you can see 1750s, that pivot area. So, you know, I said yesterday we could, you know, this area down here could potentially act as a base. We'll see. All right, if Bernanke does launch QE3, then I think we see gold higher. If not, then I think we see dollar move up, and I think we see gold continue to go lower. So perhaps 1800 is going to act as decent resistance up there. So if we back it out, I just want to go back to euro. If I back it out here to the daily, all right, you can see that, you know, we've been in this tight range, and we've got the potential for a break of the range one way or the other. All right, and I think that the possibility is that we could see some dollar strength. All right, if we look at the pound on the daily, all right, it looks like the pound could retest these 160 lows, perhaps. All right, so looking at some of these other things, Aussie, you know, these guys have just been trading on the risk themes in the market. All right, this is the daily chart, mind you, so you can see how the ranges have tightened, but this actually looks to me to be, I don't want to quite call it a bear flag here, okay, but this action right here tells me that this could come back down lower, and we could perhaps retest these March lows here, a 97.50. Not today, but, you know, in the coming weeks, and especially if Bernanke says, hey, I'm not going to do anything. We could see the flight to safety trade happen. We could see some selling in stocks. All right, we have this European crisis going on right now, which is sort of, nobody's paid attention to it. All right, but you know, Greece is still running into problems. All right, it may not get the EFSF passed. Okay, there's some rumblings about that, so they're not out of the woods yet over there in Europe. And with Greek two-year yields, you know, up over 40%, it's going to be hard for them to figure out how to solve that. So, you know, a lot of risk in the market, and everybody's waiting on Bernanke today. And you know, quite frankly, I mean, I just don't know what more he can do, what he has the political will to do. And you know, you've got all the politicians this week hiding for cover. You know, they're all away on their vacations, which, you know, it's going to be interrupted by this hurricane that's about to rock the East Coast, which, you know, who knows what the economic fallout from this could be. Okay, but then again, there may be rebuilding efforts that need to take place. That could be a good thing. Maybe we get some jobs out of this hurricane because, you know, Lord knows that the people in Washington aren't getting it done. So probably gonna have some volatility up and around Bernanke's speech. See what he says. You know, keep your eye on the on what's happening, but you know, just be careful with it, because you know, excessive volatility, something like, you know, waiting on people's words, you know, is a little bit different than when you're just sitting there waiting for an economic data point to come out. So that's what I've got today. If you're on the East Coast and dealing with this hurricane, be safe, and good trading to all.